Hello, ladies and gentlemen, and welcome back. Well, this is it. The FOMC comes out in less than 24 hours to tell us that they're probably raising rates by about 25 basis points. This is not unexpected, but where we find ourselves in markets around the world, whether it be stocks, cryptos, or commodities, is at absolute critical levels. The S&P 500 is literally at a zone where if it breaks out, we have to expect markets to continue to move up for a little bit of a period. And retail traders are absolutely feeling the FOMO right now, with dumb money inflows increasing at a rapid pace. So today we break down what's going on with consumer sentiment, what's going on also with the markets, and of course, how are the options positioning into such an event. We've got it all right now, so join us. Well, welcome back everybody to the Daily Show where we talk about markets around the world. As we're in earnings season, we've got to talk about a few companies and how they've done, but then we'll get into the macro data, the lead indicators, and of course the key levels that you need to be watching for specific markets around the world. AMD revenue beats targets, and Wall Street was fairly relieved by this. It actually rallied a little bit after hours, and we found that basically it's still holding a potential island level. We'll talk more about that later on. It was something we brought up in the previous session. We also see that Snap is stuck in a pretty bad situation. TikTok's putting an effect on many social media platforms, and this one was continuously down. This stock doesn't seem to be able to get out of the doldrums, back under $10 for it for now. So why did the market go up in the previous session? Well, there's a few reasons. We did talk about the point of control in the previous video, and we spoke heavily about how that was a very heavily traded zone, and the markets went to fill a gap. Effectively, they went back to that 40.70 and closed right around that level, which is fantastic because now that gap has been filled, we don't have to talk about it anymore. But another thing is the average return on the 31st of January is actually about 70% positive and quite a high percentage of average return percent as well, over 0.5% over time. If you're interested in this type of data, I'd have to suggest that you consider going over to our Linktree link in the description down below and just basically signing up for the 3 free trading cheat sheets. I will be sending out a bit of a newsletter moving forward as well. If you sign up for that, where I'll include some of this data along with some other seasonality traits that I think all of you will benefit from, whether you're an investor, trader, or anything else. It's completely free, so you can definitely check that out. And while you're at it, follow us on the other social media platforms we have. So it's time for us to bring back one of the old favorites, sentiment surveys. We use these as contrarian indicators here on the channel, and we stack it with technical analysis to build a confluence story. Remember, whether you're a trader or an investor, building confluence, building external factors that go together is super important. So what does everybody think at the moment? Well, historically, it's when people start to turn really bullish on these surveys that we can start to say maybe we're starting to hit the peak. In recent weeks, we've seen a switch. Bears have become less prominent in these surveys, and neutrality and bullish has become more prominent. Now, when did this happen last year? Well, funnily enough, it happened back in November, where we saw a huge shift from being bearish before that into being bullish. Well, we all know what happened after November. We went to December, and December turned out to be pretty negative period. So that's why we start to look at these surveys. As we hit key levels, we're looking for more people to start to turn bullish. And this one is a statistical fact that it tends to be a great contrarian indicator over time. If you haven't already, follow us over at FX Evolution. You can, of course, click that link tree, but let's have a look at some updates here. We'll start off with the smart money versus dumb money chart inflows. Yeah, it's been a pretty big shift. In fact, that's the biggest shift we've seen. Smart money dropped off. Now, I'm hoping that reading's correct because that would be pretty crazy. But smart money basically dropped off a cliff here in the readings, and dumb money inflows have remained pretty stable. So that means that retail is historically buying here, potentially going to be left holding the bags in the future, according to Michael Burry. And we've seen smart money inflows decline. This is not the only reason you'd use to get in or out of a market, but it's certainly very interesting. At the same point, I did post a tweet over here where Jim Cramer obviously is getting wild in terms of the bullish side. And Mike Wilson, one of the big callers of 2022, has basically gone out on a limb and said that he believes February is going to be weak. Now, you know, it takes it takes some pretty big, I guess you would say, confidence to be able to make calls like this. And that's what he said. Michael Burry, of course, tweeting recently, it's just basically sell. That's all I think he said. Now, we also know on this channel a few things, and that is options tend to be a big leaner into whether a market can go down or not. And so many professionals really don't look at this enough. We had this happen in 2022 two times historically, where basically we saw puts starting to decline and calls really increasing, which happened here back in August and of course back in April, and they coincided with tops of markets. More recently, we saw it dip back down into the top end here, but there's still a lot of puts in the system. Notice what's been happening in recent weeks. Puts have been coming out, calls have been going in. I mean, it's clear that some optimism is coming back. For the bears, you need that to continue on the way down. You basically need more and more and more calls to be entered into the system, and that should help to define potentially a market actually going down. Will it be right here? It's a critical zone, and it makes a lot of case scenarios for bears. But if the FOMC comes out, or non-farm payrolls or earnings this week, and pushes to higher levels, you're going to have to hold off and look towards those higher gap fills. We'll talk about those later on today's video. Fear and greed models, again, greed taking back over. Little wonder, coinciding these greed models generally with potential highs, and we're at an extreme greed mode here on this indicator. So January was a great return. We also know that Aprils in these pre-election years tend to be pretty strong. And if we're looking at average returns again, February and March tend to be a little bit weaker. February, as of note, remember the Qs or the Nasdaq tends to be very weak during February. And that's one of the worst months of the year for the Nasdaq. Feb, March tend to be pretty weak. And then April tends to be a lot stronger. Now, it wasn't like that in 2022, but it's certainly the statistic that's held up through the last 70, even 100 years on economic data in the markets. Fear and greed models have entered into 71. That's jumped around 4 to 5 points there. So certainly a big increase in terms of greed over the last 24 hours. And as we see more and more and more earnings coming through, we're still at 63%, beats 298, misses 173. That's one of the worst earnings I've seen in a while. Usually we'd be sitting about 75, 76% by now in terms of beat data rate during a normal period. But of course, the markets are taking it in their stride. Lots of misses. I think spot was one of those, and then it missed and it missed, and then overall it was still up. So, take it in. Don't really listen too much to the earnings reports. They're just going to have huge flows each way. You've got to basically look at it from the picture of, have you found edge in those markets? Have you found an opportunity? These were the expected volatility moves. Funnily enough, Snap kind of lived up to its name, being up here around probably about 12 to 13%. It was after hours down around that. And AMD was actually less volatile than was expected. 8% expected vol, only moved about 3 to 4 on the day, and then about 1 to 2 after hours. Meta, that's the big one coming up on Wednesday. Just after, of course, the FOMC, we'll end up having the metaverse coming out, and expected vol is 10%. So be careful around some of these stocks. You can see Amazon's also high, Apple and Google. Thursday, the big day to watch before and after. Huge, huge, huge earnings over the next 2 days. I mean, it just doesn't get bigger than this, and you've got to be careful out there in the markets. So many people are messaging in saying, why is the VIX not going up? Well, the volatility index is not necessarily going to go up when you're trading inside of a range that the market's been at recently. It doesn't have to jump. The VIX tends to jump in uncertainty. When you go to newly traded levels, the VIX gets out of control. Well, we're not anywhere near newly traded levels. So at this stage, it's low. And the way I always look at the VIX is if it's under 20, there could be a time to think about trimming positions. And if it's over 35 during bear markets, it's a time to be looking for opportunities. We use forward PE on this channel, along with some other reasons that we, of course, always discuss. So make sure to subscribe to it to figure out when those times are. That's more of an investment philosophy, but in general, we look at that. TAing the VIX and trying to work that out, very, very difficult. Let's move over to the US dollar, and it blew through the level that we liked, which was 103 kind of 30. And then it rejected it. So it's still not doing anything ahead of the FOMC. It's clearly waiting to find out what rates are doing. You can see that this may be distribution or accumulation. Based on the last 24 hours, you would think it's going to be distribution to the downside. I mean, that's obviously a very heavy rejection wick. But I'm going to wait and have a quick look here for this. Remember, I always say patience, react, don't predict. In this case, yeah, that's a pretty nasty looking candle. If you're looking intraday right now, you'd be looking towards the bull side though, just because we are back down to these resistances, which usually become support. And we're kind of at that level also that's a 61.8 fib pullback. So if you put a 61.8 fib on something like this, somewhere around these areas is where you'd hope dollar index strength will come back in and renewed intraday kind of action. Ahead of the FOMC though, expect this to be volatile. We can't get too much information from it yet. Remember, the weeklies have been too long leg doji. So until we break the zone, we don't know the next level of equilibrium for these markets. Is it 100 for the dollar index and it goes down to the parity, or will it end up busting back up and going towards 1036? We should know at the end of this week the direction. Speaking of vol, we have, of course, huge volatility in gold as well. It came down, it broke through those two little levels that we had in here, and it comes down to the daily level close and then bounce straight off that. Yeah, look, there's a lot of slack demand for gold right now, and the trend is up. So at this stage, we cannot call the turn of gold. If we get underneath these levels, we can most likely then stipulate or speculate on a zone up here becoming the short. But at this stage, it's still bullish. That's how it has to be looked at, and there's not much you can really do about it. Where are we right now? Critical zone ahead of the FOMC. And the reason we can say that so simply is because we know that we had all those resistances that were sold off. So supply, supply, supply. We're back at this level. Intraday traders, they're going to be looking at it just like dollar index. DXY, they're going to say, oh, maybe look long. Gold, maybe look short for intraday. That's the level you find yourself at here at the time of this recording. But if we bust through these levels, gold most likely makes new highs. And that's just because it will have gone through these levels. So I'd expect something like this to occur, and then for us to potentially look towards further movement on gold. And of course, at the same time, dollar index should be making new lows. If that's what's going to occur, we'll be following it. So yeah, follow us along. US oil, big breakout low here. Now this was interesting. We reported on the previous video that we believe commodities are going to potentially struggle. And I want to talk more about copper in a few minutes, and because I actually really believe in this copper concept and the fact that we might weaken off here. But here is kind of like a high and a low scenario that comes through there. We've got a little miniature higher high, and we've actually made a lower low. So you'll notice I have an alert set at 80. I'm interested to see how oil reacts around this area here. And if it does react negatively, it could be that oil actually drops. A few days ago, I was pretty bullish on it. I thought we might see some buys recommence around 70, 78. But yeah, I've struggled a little bit through the 77 zone because initially I've always been saying $65 a barrel. I said that at $120 a barrel. And I held with it. We got down to 70 and I was like, it's pretty good. It kind of hit my first targets. And then we really ruined that downward trend around here. We've so far put lots of pressure on 82. If we got through 83, well, you know my thoughts. I was thinking we were going towards $90 a barrel plus. And at this stage, I'm probably bearish into this area if I'm thinking about technical trades. That's the way, at least, I'm looking at oil at this stage. Let's move over to Tesla, another volatile session for it. Tesla kind of gambling up and down through these areas, up 4% on the session. I'm still wondering what will happen with Tesla. Probably earnings and FOMC and non-farm payrolls will push us through. I do have the set alert here. I'm super interested if Tesla does make it through that zone. So if we see S&P 500 breakouts, Q breakouts, etc., as stocks enter through these areas, I'll probably start to turn contrarian at around those zones. At this stage, very difficult to call Tesla. You can see here the expected weekly options highs and lows, and the high is right around that 178. Let's have a look at the options though. I don't know who this is. 200 calls, 53,000 units opened recently. Yeah, there's some wild action. People are getting crazy. Calls certainly making a comeback on Tesla. The puts now, the big put wall sitting at around 160. Max Payne sitting on 160 as well. So that's where the market would close if there was going to make the most amount of money. But these 180 calls is probably a bit of a call wall for it this week. You'd think around that 180, it's going to struggle to get through there. And 200s, wow, I doubt they're going to get paid, but certainly people coming in with the big 200s over the last 24 hours. On Apple, not much to report, kind of bounced off that downward trend line that we've used so many times, found the buyers, didn't really find super strong buying. It was only up 0.9% ahead of earnings. And yeah, it was a bit boring realistically. AMD, now I want to bring this up because we find ourselves obviously in a potential island reversal. Why do I say that? I mean, obviously it's island reversal versus island reversal, but we have a gap up, which was fairly significant. We've then effectively consolidated. We're up after hours, so we're sitting around here. If the market ends up coming back down, I'm going to set an alert underneath that. And the reason I'll do it is because if it does end up gapping underneath the next session in the future, whenever that will be, then if it sits like this, usually they're pretty good momentum slingshot trades. And in this case, AMD, as you can see, very close to the highs. Again, similar to Tesla, if we do end up having rallies and we break through, as we enter and go through these highs, reactions off this level will be super important to look at. Do we see instantaneous just bull and then closures above? Or are we seeing bull, then rejections? They show us usually traps that have been placed on retail. So we'll be paying a lot of attention to that. Now, you'll notice this screen here with copper. Basically, what I've done is I've stacked this zone. To me, copper is an incredible stack. And basically, we've got a huge distribution that's led to a sell-off, that's led to a rally thanks to the China reopening. And now we find ourselves at a critical point. Often in these situations, commodities are the least or the first to, the last to go is what I mean. And at this stage, copper, iron ore, doesn't really matter what you're really looking at here, are all starting to look a little bit hot in the stocks. Here in Australia, we have a lot of iron ore companies. All of them are pretty much at new all-time highs or very, very high. And they're starting to look a little bit shaky. Everyone's talking about them. Everyone's super bullish. This copper chart, that's a critical level. To me, it stacked it and it actually already rejected a little bit off it. It's a super key level from a technical potential. And I would love to see a new low formed. You notice I've got a little alert sitting there just in case, because if that happens, we could be going in for a little bit of a cyclical downturn here in some of these metals, specifically copper and iron ore and some others. So very, very interesting. We're coming through Chinese New Year. It's now over. And we end up, well, I think it's over this week, and we end up going into a period of usual seasonality weakness for it. So copper, one I'm watching. They call it Dr. Copper for a reason. Chinese market hits a high, very great returns recently. This is the CQQQ, so effectively the Nasdaq of China. And you'll notice it did a little island reversal. We talked about that. The next session opened down. At this stage, this market generally looks fairly weak. And unless we can bust these highs at this point, this is one of those points where you think turns are going to happen. I thought I'd include for the Australians out there the ASX 200 as it's entered into a pretty key zone. This is the Australian market for anyone that hasn't ever watched it, the XJO. And look at this. It's like there's no recession, yeah? Same with the FTSE. This is thanks to commodities, thanks to metals, thanks to things like that. This market is very strong. Australia's market is definitely a benefactor of everything that's gone on over the last couple of years. And we've reached back at a critical point. This has been critical resistance or supply several times. And we actually just hit it today where we hit the previous closure points. So this area here, it starts to look very dodgy. And I think whether you use like an MT4 MACD kind of indicator or anything like that, you can make a lot of cases for some pretty serious divergence coming through these highs. Obviously, there's been more in the past. But yeah, very, very questionable zone that we've approached here in the XJO. And if metals do end up going down, I wouldn't expect the XJO to have great performance here. Time will tell, but critical level for this market ahead of a critical point with the Fed. Natural gas, not quite down to the level that I'd like, but certainly it's in the zone of interest. This thing has been blitzing people quite a lot recently. These levels here are where I start to get a little bit more excited about these types of markets. They call it the Widowmaker. We don't know it's bottomed absolutely from technical standpoint, but I am watching it and we'll continue to cover natural gas here on the channel. I think it's worthwhile having a look at. US 2000 Russell actually broke out. There's little denying that it got past all these levels here, and that was a strong 24 hours by the Russell. I say watch this reaction. There was no reaction. You'll look at the smaller time frames, 10 minutes, nothing. It just basically blitzed it, went straight through. There was no weakness. There was no initial take and then rebound. Nothing that you would usually expect. You still set alerts for these. You watch, you pay attention. In this case, there was nothing. It was just pretty strong. So ahead of the FOMC, we do have one market theoretically breaking out. If you move over to IWM, just so you can look at the ETF, you can see that super strong breakout. Is it posed to go to 195? I mean, from a technical standpoint, if you believed, yeah, I mean, that's what it looks like. It looks like a technical breakout. Obviously, the Fed will have its way with these markets, but yeah, it's technical breakout is what it is. Let's move over to the US 30. Nothing going on. Really stuck at a location. Probably good it slowed. The US 30, it's weird that it was the first to come back, but it's hovering. It actually looks more weak than strong at this stage. This is probably not the market of excitement right now. So I thought I'd include it, but yeah, not very exciting there. The triple Qs, so the Nasdaq, super interesting level coming up. Obviously, the rebound that we saw. What happens up here, something to be watching. Let's move over to, these are the expected weekly options, highs and lows, obviously. Let's move over to the Nasdaq. So we talked about the location of the S&P being fairly bullish in the previous session. 70% up day, theoretically, ended up leading to an up day for the session. It actually rallied. It was down in the pre-market, then rallied into the market itself and just kept going all day to fill some gaps. But we find ourselves here at the 61.8 golden kind of pocket of this drop. Does this have significance? Well, certainly if bears are going to take commitment of this, they've got to do it pretty much now. The FOMC will be a super interesting event because if that event ends up spiking the market, let's say we go above these highs here, what's the reaction above those highs? That's going to be something we want to watch. Now, I don't usually use the US 100 Nasdaq. I could trade it, but I don't usually use this as the lead. I usually use the S&P 500. So let's have a look at this one. S&P 500 SPX, super critical level. Gap filled, we can now delete that from our chart, but you always want to have your gap fills on your chart. It's a great thing to have on, and it's always good to see it. We still have the 4113 not filled. What if we take these highs? How do we react to that? Certainly an interesting point that we should be paying attention to. If we close above here, where are our next levels? Well, we've still got unfilled gaps at 42.27 and 42.83. And I'll make a case for the bulls to continue up if that does happen. This is so critical. I mean, I'm obviously a little bit bearish, maybe biased on the market. I try to be neutral as much as possible, but I'm obviously bearish biased probably around here. And the main reason is because we have some big greed, FOMO style things. We obviously have rotation occurring into some of the hyper stocks again. It could be the beginning of a new rally, but you know there are some things that smell about this year. So yeah, certainly we're looking at it from probably a little bit bearish tint. And the way you have to do it is if you're going to be a bear, you can't just short futures contracts. You'll get destroyed. And you've seen that recently. You have to think about options. That's going to be the only play that you really have in these markets. Here are the expected weekly options highs and lows. Funnily enough, it's at 413, which for the SPY you can see would be the gap fill up there. So interesting point for it. Again, very critical. Everyone was talking about the trend line. Realistically, I think this horizontal is much more important. I bought the trend line in, of course, to discuss it, but I didn't really change my opinion too much on it because it's not the trend. The trend line everyone saw. You know, on this channel, we talked about the trend lines way before anybody else was talking about them. Specifically, this one I remember very, very well. And, you know, we used it again here, and then it was just too common. Everybody could see it. It's pointless to look at it. Let's move over to the US 500 and check this out. So this is where the futures are. We had that bounce off the previous session. And we found that this area here was our point of control. It went a little bit underneath that, bounced, broke this pre. That was a super bull kind of thing. I put it in our private community. If you want to, you can join up, 7-day trial, link in the description. But basically, I did put that in there that if we broke this, I thought it was going for the gap fill. That seemed very likely for the session, considering the bullishness. And that's what happened. It basically just rallied up, hit the close, and we find ourselves at this critical zone. So is this anything in particular? Well, if we think about it as a pullback, it's a little bit deeper than a standard 61.8 like we saw on the Nasdaq. It is a gap fill, so that's cool. But really, I think it's just prepping for the FOMC. This is going to be clearly a huge level to be broken. If the FOMC bounces up, then you have to think the markets are going to go towards those new levels. And the first one is going to be a reaction off 41.13. And then if we do end up going further bullish, we're looking towards those 4,200 pluses because we're looking for those gap fills up there. For bears, what do you need? Well, you actually need this market to make new lows underneath one of these areas. You can see here that it's kind of going up with nice swings. We haven't actually ever been able to bust one of these last lows. So we need to bust a low. We need these kind of these highs, and then we need new lows. And what I'm looking for is, I would actually love to see this, like a take, then a rejection, similar to what we had last time. Then it comes back under here. We have a higher high here. We have a lower low formed. And then we can start to say, okay, yes, let's move towards 37.50, 35.82, all these levels that are a lot lower. There's so much going into this market right now. But yeah, that would be probably one of the case scenarios for the bears at this point. Critical level, but realistically, it's up to the Fed. I also thought I'd include here just an interesting volume profile that many of you probably haven't seen before. If we take a volume profile of the whole move down at this stage, you'll notice that we get this 43, kind of 49. Now, if I pull a volume profile from the pandemic lows as well, so if I pull this all the way across, you'll notice they both stack. So it's clearly a heavily traded zone, this just above the 43. And I think that in some ways, if we get through that 41 zone, there's a real case to be made for the markets having an incredible rally on them up into these levels and the bears not regaining control of markets till here. Could be wrong, but it's an interesting analysis point. We'll do further work on this in the future, but it's definitely a stacked zone that I am looking at. It's actually also above all of these horizontal highs. The amount of market pull-in that would happen there would be absolutely wild. What a trap that would be if it ended up being bearish. But for now, we find ourselves at what I would consider an incredibly critical next, 100 points, 80 points on the SPY. Let's move over to the futures. We've got 4010 or 410, 35,000 sitting at that top end. So obviously right around there, reactions will be important. That's where we've got all the call wall this week, and put wall sitting at 396 and 390. So pretty much the usual suspects. Lots of volatility up and down all around. But at this stage, you'd think 410 is going to be a critical resistance area for the bears. They're going to try to push down on that, around that gap fill. And if the FOMC does come out with an initial, remember, it's the interest rate decision will push in one direction, and then usually the statement pushes in another direction. We'll check that out in just a second. On to Bitcoin, no reason to be bearish on this one yet. It still doesn't go underneath our 22,300. So we're not bearish on it. At this stage, it's just consolidating right around the key zones. I've still got an alert set just above here, just in case we take it, see how the reaction works. I love doing that in trading. It's always a good thing to look at these extreme zones. When others are feeling emotions, we tend to just have the patience to see the reactions and go with it. That's a huge learning curve in trading and a big thing. So what do we have coming forward? Well, we've got the JOLTS job openings, the ISM manufacturing PMI, both at 10 a.m. We've got, of course, the first non-farm employment change number at 8:15 a.m. on Wednesday. These are all New York times. Then we've got the FOMC statement, the funds rate, the press conference half an hour after. That'll be interesting. Expected 25 basis points. If you want my opinion, I'd probably go with 25 basis points. Seems very likely in this case. Then we've got pound, euro, and then we have, of course, ISM and the non-farm payrolls. So it's a stacked week, not just from earnings of the big tech stocks, but it's also economic news everywhere. It's probably the most scary end of the week that we've seen. for a very, very long time in terms of just pure volatility. If you haven't already, come and follow us over on our other social media platforms. And also remember to sign up for those 3 free trading cheat sheets if you're interested. And we will be doing a newsletter soon with some great helpful stats that I think will help a lot of traders out there to at least stack with confluence of their key levels. Bye for now.